What's up, everybody? It's the Digital World Podcast, and this video should alert you on what is coming. And, folks, I am trying my best to try to get as much financial information. I know we talk about digital assets here, specifically XRP, but I think these videos is something you should really be paying attention to because it gives you an understanding of the climate of the financial economy. Okay, so here is Mike Maloney. This guy's really, really sharp. And he's talking about the repo market and how that's a good indicator and usually precedes a financial crisis. So I'm gonna play a couple minutes of what he's talking about here, and then we're gonna discuss uh, what he's talking about.
That came out 2 days later on August 12th. So, Dave Krensler, thank you very much. Anyway, in this article, he says that Wall Street on Parade read through the Fed's annual report for 2020 and discovered a direct correlation between the Fed's deployment of large repo operations, which precedes the onset of a financial crisis. And if you go back and you take a look at it, you'll see that this is regular repurchase agreements. So here, what is going on is the banks have the collateral, and they're in need of bank reserves. They're in need of some dollars from the Fed, and so they loan the collateral to the Fed, and the Fed creates dollars and gives them. The Fed basically invents the dollars, buys these assets with it's a temporary agreement, usually overnight, 1 week, 1 month, 3 months, but it's usually, most of them are overnight. So this is cumulative. It's a whole bunch of overnight loans, but a lot of them get rolled over. And so they take out a brand new overnight loan the next day and the next day and the next day and the next day. But you can see the onset of 2008 crisis and bam, and then for some reason it goes to zero. And then, this is interesting, that back in September of 2019, something was happening, and this is many, many months before the pandemic. Something was happening, and then they start to withdraw some of these, and then suddenly, bam, there's almost $500 billion, the cumulative amount of repos, compared to about 20, 30 billion, almost $500 billion. So this is big.
And, folks, remember there was a lot of talks. George Gammon was talking about what happened in the repo market. A lot of smart people were talking about this sharp increase in the repo market, and they've been talking about it for a while. And usually, like he mentioned in an article, and how I mentioned at the beginning of this video, it usually precedes a financial crisis. And we had this example. There's one of 1999, 2008, and now we have 2019. Folks, something is happening. And here, Mike Maloney is going to explain how there's $1.2 trillion worth that he can't figure out where it's coming from. And he shows different data. Now, and he explains that it's something big is happening. He doesn't know what it is, but he's trying to research where is this $1.2 trillion coming from. And you'll see in just a moment.
It does. It is a good predictor of crises. Now we'll go back to reverse repurchase agreements, and you can see there was we're going along at 35, 40. It used to be down at around 20 billion, 35, 40, and suddenly this huge spike. Doesn't look so huge? Well, wait a minute. The reason it doesn't look huge is because of this big spike, and these charts are auto scaling. So it compresses, once that spike happened, it compressed all the data. So let's go back to like here, and you can see that this was a pretty gigantic spike that happened in 2000. But back to our story. So we've got, I started watching this in May, and then it just absolutely exploded and peaked at 1.4 trillion. Now the difference between, it was down at about 200 billion right here. So you're at 200, you're at 0.2 trillion, and you go to 1.4 trillion. So there's $1.2 trillion difference between here. Now remember, reverse repurchase agreements absorb reserve balances. Remember that. It should be draining reserve balances. So let's check this out. Okay, here's the St. Louis Federal Reserve monetary base, and this goes all the way back to January 1918. I just love this. But wait a minute. It stops in November of 2019. Last updated December 13th, 2019. Discontinued. All of these different data sets are being discontinued. Why?
And I just want to mention, so he's trying to figure out from this reverse repo data that he has, there's $1.2 trillion, which has to be drained from reserves, he said. Now, he goes to different data sets and tries to show that those $1.2 trillion, he can't find where it was withdrawn from. And so he's wondering, where did they get those $1.2 trillion from? Now, also another point here is a lot of data sets are being discontinued and taken off. And if you look in history, in these socialist and communist countries, they started to take away data and try and also skewed data. And when that started to happen, they're hiding the reality of the economic situation in the countries. So beware and know. That's why history is so important, because when you look back at what has occurred and transpired throughout history, it gives you an idea. And if you forget history, you're easily influenced to repeat the same mistakes as prior generations. So anyways, he goes here, he's looking at other data sets, that reserve balances, he's looking at total assets, and he still can't find, if $1.2 trillion had been withdrawn, the charts would have dropped in the same amount, but no, they keep going up. Let's look at another data set. We see here asset securities held outright, so U.S. Treasury securities, bills. So we see here it increased in about 2019, and then it hasn't dropped, and it's 320 billion, I believe. Yes. So it's not enough. And we go, let's see another data set. We see here notes and bonds. It has not dropped. It has just gone up. Let's see another chart here. That wouldn't do it, because that's in millions of dollars. So it's in the billions. And that has been dropping, but that still wouldn't cover the $1.2 trillion. We see federal debt, which we owe to the federal bank through taxes. This is in billions of dollars. Okay? So he's looking at all this data, and he can't seem to find where they're withdrawing that $1.2 trillion. So something is happening in the reverse repo markets, and somehow they're coming up with that amount. And whenever the repo markets go crazy like this, it precedes a financial crisis. And the next financial crisis, who knows if there will be a bailout? Who knows? But they're saying there's a lot of talk about bail-ins in which the banks take your money. So, something to be aware of, something to pay attention. I hope this episode has brought you some value. Like and subscribe. Comment below. What are your thoughts? As always, I like hearing from you. This is a Digital World Podcast, and I'll see you in the next episode.